Joined by Kishore Subramanian, who's a financial expert, Ajay Dua, who's a former Secretary, Ministry of Commerce, as well as Akhil Jain, who's a founder and CEO for Alpha Vision. Thank you very much, all of you, for joining us. Let me just straight start with you, Kishore Subramanian. I mean, let's just get this fact, and a request to the panelists. Let's use simple language, stay away from jargons that ordinary people can really make use of, because a lot of questions that people have, we are hoping that we'll be able to answer them. Kishore Subramaniam, but firstly, let me just come straight to you. Well past the working hours of the bank, and you still have massive rush outside these banks. People are extremely worried. You know, and we just heard some of the voices live, and we've been getting reactions all through the day. People wanting 10,000, 15,000, 20,000 rupees for whatever reasons, immediate reasons, examinations, other expenditures. And, you know, this kind of money is not always in plenty, or it's not in buffer. They keep it away for special purposes. Kishore Subramaniam, first point, will depositors get their money back? Will they be able to save it? Because today they were told only those with lockers can get their money back. But what are the rules? How is this going to pan out?
Okay, so first, good evening to all your panelists. Let me try to make it simple for people to understand. The first thing that you should understand is that in all probabilities, the money will come back to every single account holder and depositor. Now, what is the bank, what has RBI imposed on the bank now is, in technical terms, called a moratorium. A moratorium is a small period, a window by which the depositors cannot withdraw the money. Actually, the depositors should thank RBI that they are doing this, because the CAR, which is the capital adequacy ratio, has come down. Now, in simple terms for the customer, let me tell you one thing. The bank would have gone bankrupt, or the adequacy would not have been a situation, and the depositors, whether it is current account, saving account, FD, would have lost their primary money. RBI has intervened and ensured that that's safeguarded. Point number one. Point number two, you need to understand that the customers are asking a simple question: why can't the RBI inform us? Let me explain it to your viewers. The RBI cannot, should not, will not inform you in advance. Because the moment it is informed, there is a panic and people will run the bank. Technically, running the bank means all of them come to the bank asking for the money, which is impossible for any bank to give. Because you understand banking as money given by you to the bank, lended by them to somebody else. So RBI has intervened. My hope is that within the next 1, 2, 3 or 7 days, they will allow small withdrawals. Within 14 days, 21 days, 30 days, certain larger withdrawals. Within 1 or 2 months, it will be most probably either restructured, taken over, depending on where the financial situation is. Every single money will come back, until and unless there is some massive fraud or something has happened inside, for which I am not privy to the information now. But this has happened earlier with Global Trust Bank.
Right.
Indian banks have done this earlier. Your money is safe, you will get it back. Temporary hassle, fairly understood, but that's the risk you are taking by putting your money anywhere. Now, RBI has basically taken control of the board now, and I think they will sort it out very quickly.
Okay. Ajay Dua, if I can get you in. Ajay Dua, now, you know, one of the things that people often say is, if our money is not safe in banks, where will it be safe? You know, that's just a very general way of putting, for somebody who suddenly can't take out the money that they want to take out. That's just a very general, simplistic way of putting, but that's how the sentiments are. My question to you is, when you look at a cooperative bank, there are many times concerns around it. There are, of course, regulatory measures, but there is a reason why people choose cooperative banks. And it's not necessarily restricted to people of a particular financial group. People across the strata also go ahead and prefer cooperative banks for various reasons. Would you want to tell us what is this concern around cooperative banks? Because there seems to be, you know, growing issues across states, for that matter, when it comes to these cooperative banks.
Thank you, Sneha, for having me on your show. I'm one with you on the fact that the cooperative banks have a very large clientele, and very often these are small people, if one could call anybody small. It's a wrong way to describe any human being. But in the neighborhood, small income, and the cooperatives mean you have a sense of ownership about about an entity which is technically being run by all the cooperative members, whether it's a housing society or a loan society or a input society. Or the fact is that the anger, the pictures which your correspondent showed when she was interviewing various customers today, is very genuine. I think the RBI is a technical, that the cooperative banks come under a dual control. One, the control of the state government, because the cooperative departments are controlled by the state government. And only in the last 4 or 5 years, after we had seen the Global Trust Bank being taken over, and before that, a couple of other urban cooperative banks, did the RBI get in to, and the government, through a change in the mandate of the RBI, put it in charge also of the operational matters of the RBI, of the cooperative banks. With, I think, the state government, the audit reports are, state government is also entitled to uh, audit all the cooperative banks. They appoint the auditors are appointed with the approval of the state government. An annual report has to be filed. So suddenly, the bank cannot be coming down from a robust functioning position to one of a loss. But the loss is only 23 crores last year. Right, in 23-24, which was a full year, the signs of the trouble happening and that the bank management was aware of it comes out for the fact that despite the deposits being fairly high, last year 2375 crores, this year say 2100 crores, they lent only about 1100 crores compared to 1375 the previous year. So the management was aware. The board of directors appointed by the state, it's partly approved by the state government and by the RBI, they could have surely got early signals of that things are going into a problem. Because yesterday, the Reserve Bank of India first put restrictions. Today, they appointed an administrator and have extended the period of moratorium from 6 months to 1 year. So when the customers are shouting, I think they are doing it legitimately. And there is absolutely need.
I think you're making a very important point, Ajay Dua. So essentially, you are arguing that there was another way to do it. And there could have been another way of doing it if the early signs were read into and acted upon. That's very interesting. In fact, quite different from what Mr. Subramaniam here was speaking about. But let me just get in a third perspective at this point. Akhil Jain, how do you look at what Kishore Subramanian has said as well as Ajay Dua has said? Could this have been done differently?
Well, Sneha, I totally agree with partially agree with what Mr. Ajay and the other panelist was mentioning. But my whole point over here is that why, being such a close-knit community, RBI has imposed has a lot of risk management activities. I mean, if there were early warning indicators with respect to the financials not being proper with this particular bank, why was it not raised earlier? And my whole point is to impose restrictions of maximum withdrawal of 5 lakh rupees over a period of 6 months. How bad will it impact the retail savings of the retail investors? I mean, who have their life savings parked there. I mean, and there's small businesses having current accounts. I mean, when you restrict the deposits and usage of funds, I mean, these will certainly have a critical impact on all the. I mean, it will certainly have a waterfall impact, not only in terms of savings, but also in SME and MSME segment as well. I mean, if at all there was a early warning indicators, I mean, I think the banks and the RBI and government agencies should certainly kick in as early as possible. I mean, and not wait till the last hour and, and then suddenly one fine day impose restrictions on, withdrawals and, access to the funds. And these are hard-earned money of, people of our country. And this is not the first time that has happened. I mean, we've seen in the past also in the cases of Yes Bank and all, we have enough examples, I mean, where we can, watertight, I mean, these pilferages.
Okay. Mr. Kishore Subramanian, here's the question. For people, often financials and the entire discourse around them becomes extremely technical. But when two experts in a panel have a very different opinion, where you have Mr. Dua saying that, listen, early signals should have been caught on, things were going wrong, and management was in the know-how of how it was panning out. Anybody who was following it, scrutinizing it closely, should have known that things are going already. Why the last-minute rush and clamp down? How do you look at that, Mr. Subramanian?
I don't have any inside information, Sneha, on what was the early signal, and these are not banks which are too big to fail, as in category is not too big to fail. So there must have been some early signals. The audit process has a lot of internal findings. There are external committees, but as Mr. Dua said, it's monitored dually by the state government, and the RBI now has currently superseded. So what is important here to understand is, let's talk from the customer's point of view. That's very important. We can talk about internal committees, technicalities, banking. From a customer's point of view, more than 90%
Mr. Kishore Subramanian, here's the question. Will all the money, I mean, it's going to be sad that people who want to get their money back possibly are not going to get them with immediate point of reference. They may have to wait for a period of time before they can take X number of their money out of the bank. The question that people have it, will they get their entire money back? Or
Sneha,
is there a chance that they may lose a part of the money?
No, let me answer this to you, Sneha. With reasonable amount of guarantee, I'm telling you, they will all get every single rupee they had put in the bank with reasonable guarantee. Point number one. Point number two, please understand, over 90% of the money deposited in that particular bank is insured under the credit guarantee scheme. So there is an insurance cover which is under 5 lakh to 5 lakhs. So even 90% of depositors have less than 5 lakhs. So that's also taken care. So even if there is a risk, there is risk for only 10%. And mark my words on this, Sneha, do a show on this after 1 week, 10 days. By 1 week, 10 days, RBI would have released some amount which they can withdraw immediately, and they would have put the entire process. My expectation, we have got a fantastic regulator. My expectation is within 15 to 30 to 45 days, everything will be sorted out, whether there is a takeover, transformation, management change, whatever will happen. How deep is the problem? I don't know. I'm not privy to the information.
Okay.
So, but everybody will get the money back.
That's true. None of us know that because the RBI's letter also does not speak any of that. But I have just about a minute left. So Ajay Dua, do you want to make the last words on this show? Of course, even if Kishore Subramanian is saying maybe 35, 40 days, everything will be sorted out. That period can be very, very long for the kind of people who have invested in these cooperatives. But I'll leave the last word to you, Ajay Dua.
Absolutely, Sneha. I'd like to see that if DICGC, that's another government body at the Reserve Bank of India, under which all the deposits are insured, but up to 5 lakh rupees, knowing that they can get 5 lakh rupees from the insurance company, the bank should tomorrow itself come out with a notice saying up to a certain amount, full deposit limited to say 50,000 rupees, we are willing to let you withdraw. You can't shock the people and say you can't, now there is no money available, and you take let them sign it, that the money which will be given to them as insurance premium or the insurance payout can be adjusted by the amount which is being paid to them tomorrow. And later on, people who are above 5 lakhs, the bank will have to find a way out. And a number of people, might be 90%, what the financial expert on the panel said. But the amount is fairly large. And if we have to go by what happened in the case of Global Trust Bank and other cooperative banks which were taken over, a lot of money did not come back to the customers. But I'm dividing it. Small customers, let them get their full money right away. And if it is somebody's got 2 lakh rupees, he can reach that in 30 days.
Okay,
But
okay.
for daily expenditure, he must be allowed to withdraw, say, 50,000 or a lakh of rupees immediately.
Okay. Right. Sir, I'm sorry I'm intervening. I'm totally out of time. My director is telling to move on. But thank you very much to our panelists. Kishore Subramanian, thank you so much for your time. Ajay Dua, thank you very much for joining us. Akhil Jain, thank you very much for joining us. We do hope there are long queues outside well after the working hours of the bank. We do hope that there will be some kind of a resolution, at least to ease the burden and the chaos when it comes to the consumers. Thank you very much for your time. Up next at 7 o'clock, my colleague Ashish Parekh takes it over.